GM.
GM, how are we doing?
Very, very good. Thank you, Thomas Bahamas. How you doing?
Doing pretty good. Looks like Jack isn't quite joining us yet. Jackie there? I don't see him.
I'd say negative. That's all right.
Yeah, we could take the intro here. GM, everybody, welcome back to the SolanaFloor recap, where we will be breaking down Solana's biggest stories straight from the SolanaFloor newsroom. I am joined, as always, by Finn Miller, our senior journalist. Finn, GM, how are we doing?
GM, Thomas, GM. Yes, very, very well. Been a bit of a messy week, but I feel like that's almost that's part and parcel of what's happening in markets these days. Some shocking announcements. We've got another third day of Clarity Act shenanigans happening in the White House. That's looking a bit constructive. We've also had Zora come on to Solana, so a bit of action there. And AI agents are continuing their renaissance on the network as well. So plenty going on, and I'm looking forward to breaking it all down with you.
Yeah. Gentlemen, my apologies. I think every technical error that could have happened at the same time. I'm back. I'm with you all. How's everyone? Thank you for starting the stream without me. Apologies to everyone watching. If it looks like I'm filming through a potato, it's because everything has gone wrong, but we fixed it. We are back, and we're going to get into that newsletter in just a second. Should we do a little bit of a market update, bit of a sentiment check, bit of a pulse check, guys, before we dive into it?
100%.
Welcome to the show. Let's hear it, Jack. How are we doing?
All right. Well, we're doing better than we were last week. That's for sure. I was away for a little while, as you guys well know by now. You took care of everything, which was perfect. Markets have been tumultuous, to say the least, as we'll see in Finn's very interesting intro to the newsletter this week as well. But I figured it's worth just taking a little bit of a step back, because the discrepancy between fundamentals and price and institutional sentiment and retail sentiment, in my mind at least, and in the minds of some of the people that we're speaking to on the big picture, has never been greater. So it is a confusing time in the markets. Also, apparently a confusing time for my hardware right now in the room as well. But we got this. So it's been a juicy week, I think. It's time to talk about airdrops, not necessarily in a positive sense. There's some airdrop drama happening. We're going to talk about RWAs today. We're going to talk about the Fed injecting billions into markets, which should theoretically be an insanely bullish piece of news as well. We're going to talk about some macro uncertainty, potential war in the Middle East, which nobody wants to see playing out, but it might happen. So aliens as well is another thing. Who would have thought that we'd be talking about aliens on SolanaFloor weekly news recap? But that's going to happen as well. I think the warning here is put your seatbelts on, grab your knickers. It's a bit of a wild one this week, and we're going to dive into everything, including the top 6 stories that are moving the Solana ecosystem as well. So very, very quick market update here. Doom and gloom, I think, is generally the theme that we're observing. Prices are down, CT's quiet. We have a bunch of high-profile people, including Kyle Samani, that have sort of exited. A lot of the podcasters out there are talking about, is this the end? If you are into the Ethereum ecosystem, you'll notice that almost nobody that usually attends is attending. I think Solana is sort of the exception to this. We have our own hackathons happening. Mountain DAO is going ahead. So bit of a discrepancy between the Solana ecosystem and the rest of the ecosystems out there as well. Generally, what we're looking at is widespread disappointment from retail. It's very, very quiet out there. And we're going to get into this incredible write-up in just a second as well. It's called The Great Repricing. If you haven't seen it, it's on CT. Go and read it. It's worth doing a deep dive, I think, in the coming weeks. And it really talks about this divide between institutional sentiment and the crypto native, or CT sentiment, if you will. And it comes down to this disappointment of us having met our targets, right? We did everything right as an industry. We built, they came, but price is lagging massively behind fundamentals. And before we get into your newsletter here in a second, Finn, I'm curious if you guys agree with this as well. If you look back over the last 10 to 15 years, this write-up is quite heavily arguing that we've done everything right. Even the regulators eventually flipped bullish. We got some acts passed. The White House is generally bullish crypto, but price is massively lagging. Is that sort of a sentiment that you agree with?
Yeah. No, sorry, go on, Thomas. You launch into that.
Yeah, I was going to say, it always gets darkest before the dawn. And I think that's what we're seeing with the prices and like the overall crypto sentiment. It's like, it's pretty rough, but we keep we keep talking to people, and they're talking about metrics. They're looking like through the headlines and looking at the underlying data. And I think everything is looking positive. Like I think that we're somewhere near a bottom. Is it today? Is it tomorrow? I don't know, but there is a ton of uncertainty. And I think it's going to be overblown is my opinion. But, I keep saying that every week and being proven wrong. So there's that part too.
I think you might be right in the sense that we're nearing a bottom, but I think people forget that bottoms can last a really long time.
Yeah.
So it's easy to say, yeah, it's the bottom, but that doesn't mean that we're going to bounce tomorrow. We could continue to grind for the next year or so. I think to your point, Jack, obviously all the metrics look good. People are still fundamentally very, very excited about crypto and what's going to happen over the next 5-10 years. I think the remarkable thing that has played out is that the 4-year cycle has in many ways been proven correct. The argument was that no, it's going to be a 5-year cycle. No, it's stretching out. Institutions are here. The 4-year cycle is a myth. As we've seen, maybe not a myth as people would like to believe.
Well, let me sprinkle some positivity onto that in that case. You've no doubt heard of Dragonfly. We've had the pleasure of talking with Haseeb Qureshi on SolanaFloor multiple times, and he will in fact be joining the big picture in the coming weeks at some point as well. Now, they came out with some extremely bullish news. They announced a $650 million fourth fund in a time where it seems high-profile people are leaving not just the Solana ecosystem, but crypto in general, in a time where it seems crypto sentiment, at least from the retail side, has never been worse. These guys are coming out with a $650 million raise. The most interesting article that I found, actually, it was a Fortune article in the headline. I'm going to read it for you here. Crypto venture firm Dragonfly closes $650 million fourth fund, even as blockchain VCs face mass extinction. So pretty savage description of the industry at the moment, I think. But massive congratulations to Haseeb and the team over at Dragonfly. Again, we'll be talking to him. So it seems, even though we're all extremely caught up in this price action focus, the institutions that are looking for successful VCs to fund, they've somehow put their hands in their very deep pockets and found $650 million. So they're funding the most successful VCs. And you would assume, or it would follow, that they will then be funding the most successful crypto companies out there. So it seems money hasn't necessarily dried up. The institutional investors out there are still objectively bullish, at least in the long run. And we're seeing JP Morgan analysts, senior analysts, actually coming out and saying, look, by the end of 2027, we're probably looking at a BTC price of $226,000. So there's some bit of a silver lining in there. I don't want to get too much in the bullish versus a bearish sort of sentiment analysis here, because we can go into that all day. But look, 2026 predictions aside, looks a little bit murky out there. We're going to talk about the Clarity Act. I think it's 78% likelihood of it passing in 2026. That's one of the big stories here. And finally, I want to leave you with the most bullish item of news that I found this week, which is that the Fed injected $18.5 billion into the US banking system overnight, basically, which is a repurchase agreement. And that happened on the 17th. And that is the fourth largest such event since the COVID-19 era. So liquidity is slowly trickling in. BTC is up about 2% since that news came out. It's trading at $67,000. ETH didn't move much at all. Maybe not too much of a surprise. It's actually down 1% since the news broke. It's still below 2K. Sol is leading that charge. It's up 4.5%. Now at $84 a pop, I believe, as of 10 minutes ago. And you'll be happy to hear that the Solana meme coin market cap also rose by 3%. So on top of all of that, US spot Solana ETFs grew by $6 million. We saw $6 million of net inflows yesterday. BSOL, Bitwise's BSOL, is obviously leading that charge. And then the total net inflows are now at $896 million. Now, it's not all disastrous. If you're long Sol, if you're long ETH, if you're long BTC, there is some macro news out there to be bullish about. It's not all disastrous. It's not all, hey, look, the Clarity Act isn't going to pass, so we should sort of pack our bags and go away. And I'm thinking surely there has to be even more good news out there. And I think, Finn, that's probably a good time to dive into your newsletter. Do you want to switch tabs and talk me through your intro again?
Yes. Before that, I do want to just top on. There was one absolute wildcard hit on that just popped out in the last hour or so, and that's that Donald Trump's tariffs are allegedly illegal, and they're going to have to refund $150 billion back to someone. I don't know if that goes back to the public. I don't know if that goes back to that company.
Who gets that $150 billion?
we're going to have to wait and see how that hashes out. It's going to be very messy. But can you imagine a $150 billion stimmy going out to the general public right now?
Send it.
Send it.
Very bullish.
Yes. So crossing over into the newsletter. As I was saying earlier with Thomas before you hopped on, Jack, messy week. Things are a bit all over the place. The Clarity Act is probably the most important thing that's been happening this week. Otherwise, we've had Zora come on Solana. We've had RWAs on Solana hit the highest holder count across all chains, which is very, very exciting. We'll jump into that. We've got Jupiter Airdrop being almost voted against. Looks like that's going through. So fascinating behavior on display in Solana DeFi. And deBridge is leading the charge on agentic commerce. And we've seen some other teams launch their own APIs to follow on that as well. So very, very exciting. Should we get cracking into the first story here, fellas?
Yeah. Let's dive in.
Perfect. So here we have it. It's titled Third Time's the Charm. The White House hosts the third stablecoin meeting as Clarity Act odds surge on prediction markets. So yesterday, the White House hosted a third meeting on the Clarity Act, as I mentioned. And we're still kind of going through this tug of war between crypto businesses and the banks on how stablecoin yields get dealt with in this new kind of regulatory economy that's being built. Again, as we've mentioned before, the banks are strongly against stablecoin yields going through because essentially that really hamstrings their revenues. Crypto advocates here, I think Brian Armstrong's probably been the strongest advocate towards this publicly. Obviously want stablecoins to be as widespread as possible, and they want to be passing on the yield to users. So the third meeting that they've just had yesterday apparently went quite well. Quotes that came out with saying that it was constructive and that there was a very cooperative tone. So hopefully this Clarity Act can get across the line as soon as possible, and then all the regulatory platforms are in place for things to go well for the industry after that. I believe the White House has set a deadline for March 1st for the kind of final agreement to be pitched through to Congress. So things are on the way. It looked like maybe Clarity Act wouldn't get pushed through, but I think the stars are aligning there. Thomas, you've been keeping a pretty close eye on this. What's your feeling about Clarity Act at this stage?
Yeah, I mean, positive sentiment coming out. I mean, as far as Coinbase and all of the people that are advocating on behalf of crypto right now, they're doing a really good job, right? Like they're holding their ground. They're not. It doesn't seem like they're allowing too much to actually happen. I mean, you're against the bank lobby. All the banks are massive, right? So for them to be able to hold that up, I think is strong. And I mean, the 78% the Polymarket is going to pass it by 2026. That's awesome. Polymarket, they're not pricing vibes, they're pricing probability. So, it kind of feels like they're still in the standoff right now, but hearing that there is some positivity coming out, we'll see. Crypto wants yield. They should be able to get yield. But we'll see how it goes. What do you think, Jack?
Well, listen, this has been something that really got under my skin when it first happened, right? When banks turned around and said, hey, look, we don't necessarily agree with this because you're coming to eat our lunch. And they obviously knew that this was going to happen. The entire premise of this industry was that banks aren't necessarily, or at least not always, acting in the best interest of the general public. There has to be a better alternative. As you mentioned, Thomas, stablecoins are obviously a better offering to the general public than what we've had with banks. Their greed, let's not forget, led to the 2008 global financial meltdown. So something that's been annoying me for a while. Again, stablecoins are objectively better. I think it comes down to timing. But we were talking to Stefan Russ just yesterday, right? The Trueflation CEO and founder. He had an interesting take. He said, yes, the Clarity Act will pass in 2026, but it might not be the whole thing. He sort of falls into this camp of thinkers that, it's better that we have part of the Clarity Act rather than having all of it passed. And at the end of the day, it's not necessarily good for the crypto industry. So I'm totally fine with that. I'm fine with, piecemealing it through. Yeah, I think previous guests of the Big Picture have also made similar arguments about how powerful and almighty the banking lobby already is. So I guess at the end of the day, we want this to happen. Brian Armstrong is our sort of knight in shining armor, fighting the big evil banks, if you will, over in Washington, D.C. But it comes down to what can these big banks conjure as far as future roadblocks go? What can they really offer legislators and lawmakers to say, look, maybe there's an alternative. Maybe we don't need to push this through. And the longer they can do that, the higher the chance of this not passing in 2026 goes. and the larger the negative effect, the knock-on effects on the crypto industry, given that there is a significant probability, far greater than zero, that the Democrats win the midterms in November, and that they would be a much stronger lobby at that point against crypto and against all the improvements that we've already enjoyed in 2024 and 2025. So, yeah, we'll definitely be keeping an eye on this. I'm not holding my breath. When the White House says it was a constructive discussion, that usually means they didn't really make too much progress. There's no substance to that statement, right? I'm not a political expert or an analyst, but I've heard plenty of White House briefings where they say it was constructive, and then you don't hear anything about it for 3 more months. So we'll be keeping a very, very close eye on the Clarity Act and those Polymarket probabilities as well, I suspect, in the coming 2 to 3 months. But you mentioned there is a hard deadline, which is March 1st as well. So that seems to be the next turning point. Shall we switch over to Zora, which is a little bit more crypto focused, a little bit more happy, I guess, a bit of a happy-go-lucky story compared to it's all doom and gloom. If it doesn't happen, it's game over for us. We should all pack up and go home. Should we switch over to number 2?
We shall indeed. So Zora, beloved for the creator coins on Base, has launched attention markets on Solana. This is exciting in the sense that, you know, we love having more teams come to Solana. We love having new apps to play around with. Zora caught a bit of flack from their base-based community already. It was taken with a grain of salt, this move, because a lot of people have been saying that Zora did their best with their L2 and then that obviously didn't work. So they moved over to Base and they tried with creator coins and that worked for a while, but ultimately didn't really catch the level of attrition and adoption and continued use that people would expect from something like Solana. So they moved over to Solana for attention markets. Now, attention markets, we're speaking this briefly about Thomas earlier. It's based around the premise that you can coin a trend and then you can create coins within that trend. And so new coins get added to the trend and they're paired with the trend. So basically, it's like pair trading within microcosms and within niches. So instead of like on Pump Fund where everything bonds to Sol, in this attention markets, all these specific attention coins, they bond to trends. It launched to a bit of fanfare. I had a look at action earlier today, and it looks like these coins are really struggling. They're hitting 7 or 80k max in terms of market cap. So not a huge bid there for these coins. And what's been most evident really is that people are calling out Zora really for trying to move over from Base to Solana to try and squeeze out the last bit of activity they can. Thomas, you're a bit deeper in the meme coin trenches than I am, I think. What's your feeling about Zora's shift over here?
Yeah, it is an interesting one, right? You know, I do like that they moved to Solana. I haven't really seen exactly why, you know, I haven't seen, you know, too much behind that, but I'm interested in this. I think it's something that, you know, for me, the trend pair trading, it was kind of vague. Like I wasn't sure, like I'm not going to trade this, right? So I don't understand that part. But for a boomer like me, you know, maybe I could log on there and see what the current trends are, see what people are doing, see what people are looking at, and you know, maybe that could give me some information that I need. So there is something that could be pretty interesting there. And I mean, I always thought that for Solana, there was room for some sort of social, like more social component than what we're seeing on a lot of things. So they do have kind of a social side as well. So I don't know what that plays, where it goes, but I mean, it could be the start of something that is pretty interesting and informative.
I wonder to what extent this is going to take off, though. To your point there, there's always been this sort of gap around social trading. Yeah, it's been tried a few times, I feel. Yeah. Vector was, I guess, the closest that I found was a successful one. I loved the feature that they had where you could see who was buying where and when on the chart, and you could sort of copy trade that. People could send out notifications. You'd literally get push notifications from the traders that you were following saying, I bought this at this price, this market cap. But it didn't necessarily take off, right? So what you were saying, Finn, earlier about Zora being this, you know, ETH native project, bit of a darling of the base community, I suppose they are justified in their frustration, I would argue. It's like, you know, if you're a soccer or football fan, you know, your star player going to your opposing team, your biggest rivals, you're going to be kicking off about that to a certain extent, right? It's not going to be something that everyone takes lying down, given that there has been some animosity between Base and the Solana ecosystem in the past. So I wonder I wonder to what extent this is just an attention play. Really curious to see what the next moves are going to be. But if it works, it works. And again, to your point, Thomas, there has been that gap in the market here in Solana land for a social trading platform. So fingers crossed it works out. Fingers crossed people don't stay angry.
Yeah, like there is a gap in the market for social trading, but also it's been tried so many times, and we've really struggled to kind of have a killer social fi trading app that has gone the distance. I think FOMO at the moment is probably the best example. And to your point, that's maintained this idea that, you know, the little profile picture pops up on charts where people are buying and selling. And I think FOMO is probably the app that's had the most sticky user base from that. But yeah, we're not really seeing any innovation, I would say, in the social fi trading. It's kind of hasn't really changed its form in the past year or so. I like the idea of pair trading. I think pair trading is a very powerful tool. I think as it goes further down to these long tail assets and you're pair trading meme coins on trends, it's very, very niche. So as long as there's arbitrage routes between the trend coin and Sol itself, it just gets arbed out anyway. So yeah, I think it's an interesting idea. I'm curious to see if the execution actually plays out as they plan.
Yeah, and you know, speaking of execution, you know, one part of this is there's, you know, a big debate about Ethereum and its L2s going on right now, right? Vitalik's kind of like, hey, we don't necessarily need them as much as we used to, which, you know, Solana's been talking about for a long time. So at this point, is Solana becoming the default execution layer, you know, even for projects that were supposed to be base first, Ethereum first, right? It kind of follows the flow of, you know, builders are going to follow users are going to follow liquidity, and, you know, I mean, liquidity follows speed and cost. So I think that, you know, what Solana was building is, you know, they're proving it out with a transition of an app like this, right?
Yeah, Lily from Foundation was making a compelling argument along the similar lines as well. She was saying, look, whatever the asset is, you know, you could be in love with BTC, for example, and not want to touch the rest of crypto assets with a 10-foot pole, but it's probably in your best interest, selfish best interest, to go and trade that on Solana. You know, all other venues will eventually sort of fall to Solana, is the argument that she was making. So let's see. There's definitely a lesson in that. If the darling of base is deciding to move, I just want to pay attention to that. What is it? A chart, a meme, an image there. It's a little bit savage, but what they're saying is we got all the fees we could from base. I guess we try Solana next, and there's a little exit liquidity glass at the end. Nice little jab from Bold. But yeah, let's see how this one plays out.
Comic.
Yeah, we love it. We love it. Obviously, we don't want crypto tribalism. You know, we all want to be friends at the end of the day, but that's pretty savage. I like it.
Yeah, and I think it does reiterate this thesis that Solana is kind of the retail chain in the sense that it's where the most trading activity happens. It's got the highest spot trading volume across all chains. If you want to trade any asset, it's going to be happening on Solana principally. It's the internet capital markets thesis in real time, I would say. Certainly. What do we think? Story number 3. Yes, pushing swiftly on. This one's a doozy. So over 81% of whale voting weight backs zero emissions in Jupiter DAO vote. So this has been, I think, all people have really wanted to talk about over the last week. The Jupiter DAO vote to go to net zero emissions. Just to summarize, the current vote wants to postpone Jupuary. It wants to buy out the mercurial stakers, and it wants to basically trend Jup emissions down to zero so that the Jupiter community can basically put the token on its back, send it back up without having all these dilution concerns that have basically been plaguing Jup since it launched. This report thrown together by our data wizard Ario is absolutely brilliant. The most important stat, I think, the thing that really tells the story for me here is this one on the screen in front of me. So basically, the more Jup people hold, the more likely they are to want to vote against an airdrop. I think it's staggering that in big old 2026, we now have people voting against getting free money. Maybe that's an indication of maturity for the industry. But yeah, the interesting point is that basically smaller wallets, they want the airdrop, they want it to go ahead. Larger wallets, they just want Jup to start going up again. Thomas, you're more involved in Jup. I think you are a Jup staker. What's your read here?
Yeah, you know, I've got mixed feelings on this, right? You know, obviously it's like I love a good airdrop. But I mean, Jup has done a lot of airdrops already. And if you're going to airdrop a token that is going to zero, like why even do that? Right? You know, like let's just stop it. Let's figure out a way to build some value into the token. And that's what they're doing. And I mean, they're taking an honest look at this, and they can't continue on the current path because the current path is not looking good, right? So they have to make some changes. And I mean, the whales are the ones that are talking. You know, it seems like a pretty significant vote there. So you know, I think it's better if they stop the airdrops. But I mean, obviously they have kind of already announced it. So I was looking forward to a Jupuary airdrop, right?
I have a question for you guys, and it actually comes from the comment section. I'm going to try and pull this up for you guys now. It was the first comment under your weekly newsletter as soon as you posted it on Substack. So maybe you can scroll all the way down to the bottom, hopefully without flashing too much of what you've worked on there. Before I pull it up, let's see. Can you see the comment? Yeah,
yes.
read it out first. I found this fascinating.
Dr. Unani says, it wasn't the whales, it was the team wallets that made the difference. What is the point of doing a vote when those wallets vote? And on top of something that was already voted and approved. So Dr. Unani is saying that it's not whales, it's people on the team who are influencing the vote. Topical, listen, I believe Meow and Xiong have said that they are not voting in this one. There is
but that's just two wallets. That's just two wallets.
That's just two wallets. In the article here, I believe there's a mention of there we go. So there's a third co-founder who obviously holds a lot of JUP who is voting for the airdrop to be postponed. I think this is a very, very interesting topic to discuss. I think it's a larger question among the governance debate. For me, team members are also part of an investment community. I'm not sure it's fair to say that team members shouldn't be able to vote on governance proposals. I think they have more at stake than pretty much anybody else in these games. So saying that in a world where one token equals one vote, but not for certain people, it kind of defeats the purpose of governance existing in the first place. I think if you want to go down this one token equals one vote road, you have to respect that for everybody. I can see that Meow and Xiong don't want to vote because they don't want to influence other people's decisions. But I think, yeah, I think if you hold JUP, you're allowed to vote in these things. That's as simple as it should be, really.
I think that's totally fair. That's totally fair. But didn't Meow in the article somewhere that Ario made also, I think he included this post from Meow, right, where he was basically saying, if you scroll, there it is. Yep, saying, look, these are the reasons why we have maybe other ways to benefit from this, and we don't want to unfairly influence it. Just going back to the comment under your Substack, though, I think what he's arguing is it's not just whales, or it's not whales, but more of an impact on this governance decision has been coming from the founders and the team themselves. I think that's what he's a little bit salty about. Listen, my take on it is governance. It's always going to be an issue. If you choose to participate in something like this, you know, it's not a democracy at the end of the day, right? It's a different form of governance, and things are going to go the way maybe you don't want them to go. I would be more shocked if people weren't getting up in arms about a decision than this kind of outcome. This, to me, is a slow trajectory of maturity. I think things are moving in the right direction as far as, you know, to your point, Thomas, deciding to accrue value, not just through airdrops, through a token that's declining in value over time, but through other mechanisms. To me, this is a move in the right direction. And yeah, I would be shocked if people weren't annoyed by whatever the outcome is.
Yeah, I would echo that, to be honest. I think for the first year of JUP's existence, its sole purpose was to be staked to get more airdrops. And it kind of fulfilled this prophecy of you have JUP so you can get more JUP. And JUP didn't actually serve any purpose. Since they started integrating buybacks, there was perhaps a reason to hold. But as people have said, the constant airdrops, the constant emissions has basically just put too much sell pressure on JUP. And I think now, by turning it to net zero emissions, there's a lot more reasons for JUP to go up now. I think if I was a JUP holder, if I was a JUP staker, I would absolutely be leaning towards going option 2 and trending that to zero, because this is what we mentioned last week with Thomas as well, is that JUP did about, I think, $70 or $80 million in buybacks last year. So that was offset by emissions, that was offset by new tokens coming into supply. If you trim that down to zero, all of a sudden, all these buybacks are just going straight into the chart. And whether you believe in buybacks or not, you're going to have a massive supply offset, and that's going to be continued buy pressure. So I think if you are optimistic about Jupiter, if you're a believer in Jupiter, you've never had a better chance, I think, to put that flag on your back and try and carry this token back up.
Yep, and they have so many different products as well. You can't be relying on buybacks and airdrops as your core value proposition. It's just you're sort of shooting yourself in the foot, right? And it would be a bit of a shame for all those gigabrain developers that they've hired over the years and all these amazing products that they've launched. So yeah, I agree. Overall, long-term maturity, I'm with it. But then I don't have any potential airdrop losses, right? So I don't have any reason to be salty.
Yeah, I think that's probably the biggest concern people had, was that they were sold this idea that there's going to be an airdrop, and if they use JUP over the course of the year, they would be rewarded for that. And that reward has been snatched away. But I think the price appreciation that you would hope would come from the reduction of emissions would outweigh the airdrop you would get. So everything is a trade, everything is a game. Yeah, just have to wait and see how the economics play out for that.
Yeah, and I think that everybody's watching this, right? I mean, JUP is one of the biggest, protocols on Solana, right? So everybody has their eyes on this. They've done their airdrops, and now it's time to bring some accrue some value to the token. I mean, when they launched their Lend protocol, they got $1 billion in TVL in like less than a week or something like that. It was incredibly fast, whatever the exact time frame was. But I mean, for them to be able to do that, and then you look at the chart of the token, it's like something is mismatched here. So they're addressing that now. So I'm optimistic for this, and I think that for Solana, we should want to see this chart turn around, right?
Certainly. Yeah. All right, gentlemen, moving swiftly on, because this one, I've been looking forward to this conversation. RWAs. I love RWAs. This is something that we've been tracking very closely. I've been tracking closely for years. I'm sure Thomas Bahamas will agree with me that this is overall incredibly bullish news. I'll let you get to the headline in a second, Finn, but Solana leads all chains and RWA holders is the type of news that we all want to wake up and read, right? When you first thing you do in the morning, obviously, is go to solanafloor.com and check the headlines. This is in my mind, this is the sort of pinnacle of headlines that you could possibly come across. Finn, take it away.
Yeah, it's wonderful to see nice headlines in a down market. I was absolutely stoked looking through the stats when I saw this one. So what we have before us is that Solana boasts the highest number of RWA holders across all chains. As you can see in this RWA.xyz graph, we were behind for a long time. Ethereum and Plume both had a head start, but in the last few months, well, last few weeks really, the amount of wallets holding RWAs on Solana has flipped Plume, it's flipped Ethereum. We are now the home of RWA adoption on chain. So over 302,000 wallets are stacking some kind of RWAs, whether that's tokenized stocks, whether that's tokenized metals, it could be treasury funds. It's a very, very good sign. And even beyond a growing holder count, which, let's be honest, is easy to game. Every chain can do it. So let's not say that it's more likely to happen on one chain than another, but it doesn't hold up entirely as this foolproof metric. But even on top of growing holder count, the market size of Solana's RWA economy is at 1.6 billion. It's up 52% year to date. A Masari report said that we had about 58% growth Q on Q last year. And in the first quarter, we're already at 52% growth, and we've still got about a month and a week to go. So very, very positive momentum. I'm going to throw it to you, Tom. You were going on about the altcoin season in metals. How's that feeling now?
Yeah, I mean, that might have cooled off a little bit. Altcoin season in metals, it doesn't seem like it's continuing as much as we wanted, but it's not the end of the world for them too. And I think what we're seeing is, crypto has been struggling, right? But the manlets still want to trade. And I mean, it shows in this data. I did that video a couple months ago, or less than a month ago, and we were well below $1 billion. So, to see the growth is insane. And I mean, look at like what Remora is doing, for instance. We've got metals, equities. There's tons that you can do in DeFi, like with the flash trade integration. You can loop it with loop scale. When we're just seeing more, right? We're seeing more commodities and equities that are going to be added. So it's all pointing to a maturing ecosystem. The question is, of course, will this compete or clash with, the existing focus on meme coin culture and the trenches? And, I got a video coming out a little bit later today. Got a plug that a little bit on the Pump Fund lottery. that's going on. So kind of break down what's been going on in the trenches lately. But I don't know, Jack, what are your thoughts there?
Yeah, I think for me, two things stand out. So the massive head start that other ecosystems have had compared to Solana when it comes to this RWA race, right? Solana didn't really make much of a dent, going back to that chart that you were showing a little bit higher in the article, Finn, until mid 2025. I think it's about July 2025 that you really see that uptick in RWA volumes and AUM. And I mean, massive growth in a very, very short period of time. Plus, second point that really stands out to me, I think, is this, the addition of this institutional push that happened, sort of exploded rather around a similar time, mid 2025, and then it's definitely looks like it's going to continue into 2026 as well. Hopefully, we get some more bullish news from the White House and Washington D.C. But overall, these are two very, very strong signs of approval of Solana. I think to your point about this mismatch between the sort of the degen trench warfare ideals of Solana land, right? The origin story, if you will, and this institutional push and this like regulatory demand that we now have. I don't think the degeneracy is going anywhere anytime soon. You mentioned that the manlets want to trade. They do. I think people want to gamble, and if you give them a great place to gamble and it's cheap and there's community and there's a social element to it, they certainly will do so. I guess the overarching theme here is you can do all of this on a single chain, right? You can long metals. You can hope for an alt season in metals. You can watch your funds grow on chain. You can loop them. You can do all these cool DeFi things that we love. And then with your winnings, hopefully you're not sort of bankrupting yourself, but with some of your winnings, you can go and buy the S&P, buy some stocks, or if you really want to, you can gamble on meme coins and hope for 100x again without bankrupting yourself. And all of this can happen in a single venue, and that to me is why this is my favorite story so far in your weekly newsletter, Finn.
Yeah, I think there's also two sides to this. And while as a user, it's very exciting that you don't have to hold all your wealth in crypto, which, let's face it, is extremely volatile and could go down 10-20% in a day, and you can instead park it in things like the S&P 500. That's great. I think if you're an issuer, blockchain becomes very fertile ground for expanding the supply of what you're doing and reaching a much larger TAM. So that's very evident by Hastrify. Hastrify launched Prime back in December with about 10 million in market value on Solana, and today that's at 309 million. So through connections with Camino, through looping, like we mentioned, Prime has absolutely exploded. The market size has 30x, I believe, and that's the multiplier there. So if you're an issuer and you want to grow, you want to issue more of these assets, there's a really, very easy way to do that, and that's link up with teams like Camino, like Loopscale, who are accelerating the growth of RWAs. It's one of the biggest verticals I think people are looking at for the year to come, and it's probably only going to continue, right? Because while markets are choppy, you don't want to be eating these losses that might happen if we're in a bottom, like Thomas Bahamas rightly perhaps indicated. RWA looping lets you sit in stable backed assets and generate better yield than if you're just holding those stable coins themselves or just lending them out. So there's a very high ceiling on what's possible with this, I think. OnRay is the other one. Yeah. So Hastrify's done really well. OnRay has done really, really well also. And that also goes beyond these two. You can do it with Flash Trade and Remora markets. So they've got that index fund, the FLP RWA, which generates yield on a basket of tokenized stocks. So there's huge variety on what you can have. And Solana is just established itself as the RWA chain in my mind.
We love to see it.
Go ahead. Oh, I was just going to say, I think it's just the beginning for it too, right? Like it's proved out how successful it can be. So I would assume that other teams are just looking at like, hey, this was a successful launch. This was kind of the roadmap that they used. So I think that what we're seeing is more and more teams offering better and better products. So I think it's going up only.
Up only. We love it. We'll push on. Story number 5. Story number 5. So this one's a spicy one. This one I think is raising some questions. The title goes, Solana validator economics abused by universities and DATs running malicious mods. As it turns out, DATs weren't running malicious mods. They were accused of running these mods, but they've come out and said they're not. As the story goes, Solana's validator community has flagged several operators for running a vote packing mod to boost staking revenue. Basically, what this means is that they've been able to spend less on voting costs by only voting once in every 2 slots, I believe. There was a huge swath of university-linked validators that were doing this, and it's not looking good. Temporal researcher KV, we know KV over at Temporal, a very, very intelligent engineer, has said that widespread use of this mod would ultimately slow down the network. That's obviously not something that we want to happen. And the fact that all of these university operators updated their validators at the same time to run this mod indicates that there might actually be one person. So this is obviously unconfirmed. It might just be a stake pool that's that all these universities have independently joined. But yeah, there's some curious ops going on in here. Thomas, have you been able to sink your teeth into this and kind of catch what's going on?
Yeah, just a little bit. I mean, so it kind of seems like, people at universities are like trying to game the system, trying to like put their hack into it. And I mean, the upside is that it was caught on chain, but the downside is that like the incentives here, right? Incentives always get gamed and people always find a way around it. So, what matters is, how fast the ecosystem can react and actually get on top of it. Obviously we hate to see that, and we don't want everything to be gamed, especially when it's this critical. But yeah, I mean, I don't know. I mean, how serious do you think that is? Is this something that they can just put a kibosh on and stop, or is this something that's going to maintain?
Surely.
I think this is something that gets squashed pretty quickly. Sorry, Jack. Yeah. So what they're saying, what the experts in the MB validators Discord server are saying is that if the majority of validators did this, it would lead the chain to being out of sync, and maybe half of the slots would go a little bit slower. This probably isn't a noticeable change at the amount of stake that it's affecting at the moment. So we only have around 20 validators that were doing this, and they were typically all much smaller validators. So it's very, very small, even negligible impact. But yeah, we don't want everybody on the chain to be doing this, obviously. I think the fact that it's now been spotted and people have kind of shone a light on it means that there's going to be even more scrutiny on it. So I don't expect this to be widespread.
It surely will be caught. And just looking at some of those names there, I caught number 9, Dalhousie Blockchain Society, completely unrelated. I'm going to go on potentially 2 tangents here, but yeah, one of the guilty parties. I would imagine they're the smallest. That's why they've put them all the way down at the bottom. So Dalhousie Blockchain Society are based in Nova Scotia, but the original Dalhousie, as they call it in Scotland, is a beautiful, beautiful town near England, so near the border. I was fortunate enough to attend a wedding there not too long ago. So if anyone's listening and they're sick of the price action, they want to go touch grass, go visit Scotland. It's beautiful. And while you're at it, go see some castles, some history, breathe some fresh air. I think we all need it after the recent price action as well. Fellas, have you had the chance to visit Scotland?
Yeah, I'm a Scotland maxi. Scotland's brilliant. I would go back in a heartbeat. I had a bit of a lads trip there in Edinburgh a few years back, and itching to get back.
It's lovely. It's beautiful out there.
I have never been. I want to try to when we go to Breakpoint this year, I want to try to latch on a vacation after, get a kilt on, try some whiskey, have some fun.
You might need an excuse like a wedding to get a kilt on. I'm not sure they allow you to just randomly pop one on. They might think that's cultural appropriation. But then again,
I don't know if you want to be that American tourist who just goes and pops on a kilt and starts drinking whiskey.
Yeah, we'll test that.
They are very, very welcoming. Shout out to Scotland. We just had a comment come in. I'm sort of hesitating. This is the second tangent that I warned you about. Hesitating whether or not I should bring it on screen. But we were talking about Jupiter earlier. Comment goes, JUP and Meow are scammers. Max extract with Meteora equals Meow and Chow are a letdown for Solana. Sort of sugarcoating that a little bit. I know we're going back to the previous story, but that's not necessarily the feeling that I get. I think maybe that's a bit of an extreme take. What do we think? Is there any reason behind that comment?
I laughed when you read that, which probably isn't right. I mean, I feel like, maybe some things come off wrong, but I feel like Meow like deeply cares about, doing the right thing. And, decisions always don't, you might make a decision and think it's correct at the time, and maybe it doesn't work out as well. I don't think that anything has been like that malicious. So I don't know. I don't see that side of it. Obviously you could, say that if you're looking at a chart that's going down, but I think that's a little unfair. But
I think so too. I think so too. Yeah, we briefly touched on this as well. You know, it would be shocking, I think, to all of us if nobody was a little bit frustrated by any governance decision across crypto, let alone a community that's as big as JUP. You know, think about countries. You have very divisive decisions that are sometimes 52% one way and 48% on the other. My Brexit traumas are coming out here, so it's totally understandable that people are frustrated, but maybe a little bit unfair, as you mentioned, TB, to call the founders scammers. I think that's probably a good moment for us to switch over to the next story. Are we nearing the end of your beautiful newsletter? I don't want it to end, Finn. Is it story number 5 or 6? Six that we're moving on to.
This is story number 6, and we're diving back into the AI world. So deBridge, everybody's favorite cross-chain bridge. I haven't used a bridge that isn't deBridge probably in about 2 years now, I want to say. So well done, deBridge. Keep doing what you're doing. deBridge brings vibe trading to the on-chain economy as Solana seeks to reclaim its X402 lead. So the product here is that deBridge has launched MCP, which is a new API that essentially lets you speak in conversational language to your AI agent, and it will start doing transactions on chain for you. So whether that's bridging all your funds from Ethereum base and Polygon to Solana, it will go out and it will do that for you. You don't need to sit there clicking through 3 different tabs with all your different wallets out, conversational language, and it makes it happen right away. So very, very cool. In the days that followed immediately, Phantom and DFlow both launched similar products for their own AI integrations. And all of this is happening in the same time that Solana has actually relinquished its lead to Polygon of all chains as far as X402 activity goes. I was shocked by this at first, so I did a bit of digging, and as it turns out, Polygon has actually got a governance proposal online right now, which is trying to incentivize activity for X402 on their chain. So, Thomas, you are the man with the Claude bot under operation. Have you played around with this new API at all?
I have not played around with this one. I mean, I think this is a pretty cool way to do it this way. You know, I mean, if you want to bridge, there's nothing in your way from paying with, from agent to another agent. So I like this. I don't see myself using it too much unless there's I need access to specific data that is only blocked by one blockchain, I would imagine. And that's when you would use this. But I mean, I've been following the X402 stuff pretty closely. It's a fascinating part of what's going on right now, right? Where AI is everywhere and somehow crypto is now inside of it in a way that's not scammy, right? Before we've seen all right, here comes a new AI protocol and here's an attached meme coin. And then the meme coin goes to 0. Everybody in AI hates crypto. Everyone in crypto thinks AI sucks. This is getting beyond that, where you can't really game it, right? You're actually paying, and you're typically paying in stable coins to get access to, whether it's a new app, whether it's data, whether it's, whatever it is that you want to pay for, you just have your agent do it. So I think that this is going to be, a good way. I think it's going to be good for crypto in that it's set up really well for it, right? So I think that it's only going to grow, and it would make for a really big narrative, on the big picture with Stefan Rust yesterday. I was like, is this going to be one of the bigger narratives moving forward? And he said, yes, absolutely. So I'm excited about this. I like following it. I think that I think it's kind of a interesting part of what's going on, where AI and crypto are finally colliding in an interesting way. What do you think, Jack?
Well, there's a few things that stand out, but you were just showing on screen there, Finn, the tweet from Peter Steinberger, right? I don't know if you guys caught some of the speaking engagements that he's had over the last 3 to 5 days, but he's come out and he's literally said, I hate this industry. Yeah. He's come out and said some really, really harsh things about crypto people, and basically said at some point, they were following everything that he was doing on GitHub and front running him and making his life hell, essentially. And he thought, I'm just going to shut this down because I hate crypto people so much. So on behalf of the entire industry, Peter Steinberger, we apologize. That was not our intention, but thank you for giving us this amazing public good. The second thing that stands out to me is this general cross-chain ability now that we have to manage our portfolios, specifically conversational language. Obviously, agent-to-agent transactions are amazing. There was an example I came across a few days ago where somebody launched an agent. The first thing it said was, can you give me your credit card details so I can go and buy something? Now, one of the issues there is, what can you buy with a credit card? Well, you're quite limited to, e-commerce and so on and so forth. You have to depend on merchants. But when agents get to the point where they're not too dumb, and they can hire other agents that are also not too dumb, or they can hire people with a very particular skill set, then that gets very, very interesting. And I think then the adoption of crypto can really get to this point where years and years ago, you'll both likely remember, some of these agentic AI platform founders were saying, look, eventually we're going to get to the point where agent-to-agent transactions are going to far surpass the number of transactions that people are doing on chain. I didn't necessarily believe it at the time. And I think we are getting very alarmingly close to that reality, where the number of transactions being done by agents could be higher, whether it's for trading, whether it's for hiring for certain projects, than those of people's. Having said that, it does raise a bit of a red flag for me, this conversational language function. So if I can, I don't know, have a few drinks on a Friday night and then send a voice note to my agent and it misunderstands me, or I say something silly and actually executes, that could be a bit of an alarm bell. But yeah, hopefully you have some checks and balances, so it maybe waits until the morning before executing a wild trade, or 100x longing something that you don't really mean to long. But yeah, I can see some red flags. Massive opportunity. And I guess if you get around the whole fat finger risk, I'm getting flashbacks of NFT mania here, then it's surely a net positive. And once again, we apologize, Peter.
Yeah, it is a very positive, very exciting field. I think even beyond the fat fingering, there's just an element of very, very porous OPSEC that comes with this. I think it would probably be very, very easy to unknowingly, give your credit card details to an agent and then it goes wild with it, or it gives it to somebody else. The same can be said for private keys. So yeah, early days, I think I am fearful of setting up an OpenClaw on my computer and giving it full access to everything, because who knows what a random agent might do with private keys in its disposal. So yeah, I'm still hesitant. I'm still skeptical. I'm not fully embracing it just yet.
Yeah, and to be clear, I haven't fully embraced it either. Like I have one set up, but I haven't connected it to anything because I'm pretty scared about that. But I think that the way to think about this is like, I don't know, channel your inner Raoul Paul, and like the OPSEC is terrible right now, right? But people are working on it. It'll be terrible until it isn't, and then it's going to be fantastic. Like I think when it comes down to a lot of crypto, a lot of like the adoption issues is it's not built that well for humans, right? So I think that it will end up being better for agents and computers because they can understand it better. So I don't know. I'm kind of starting to see that side where I'm flipping and I'm saying that agents will probably take over transactions versus humans, but we'll see.
Yeah, I think they do. I think it's a matter of time. I think, like Jack said, we probably get to a point where agent transactions do outstrip human transactions. And I'm hoping that some good safety rails can be put in place before that eventuates.
Get into that juicy honorable mentions list, Finn. You know which one my favorite is going to be. I was reading through them earlier, and I'm trying to put my finger on which one is going to be Thomas Bahama's favorite one. I can't quite decide yet, but maybe we run through them quickly, and then we're going to get to your stat of the week and your tweet of the week, which is also super juicy always. Do you want to take it away?
Yes, 100%. I know what my favorite one is, and we can debrief after. But honorable mentions, here we go. Helium hits all-time high daily users with 3.3 million people transmitting data using DePIN. Asgard Finance introduces credit-backed positions. Jupuary unlocks 30 billion in DeFi liquidity through native staking collateralization. Solana ETFs record 7 straight days of inflows. Bitwise files prospectus for prediction shares ETFs tracking political outcomes. Pump Fund introduces cashback coins, an opt-in feature that routes creator fees back to traders instead of deployers. And Flash Trade's native token, FAF, completes transition to become a Futaki ownership token. We'll talk about favorites, and then we'll give some attention to the dishonorable mention. But Jack, I'm going to throw it to you first. What is your favorite honorable mention that we've got here?
Well, I love that Helium is hitting an all-time high. I think for so many people who don't necessarily understand crypto, it's just DePIN in general. When we hear these all-time high stats, it's a great way for people to be using on-chain infrastructure, and they don't necessarily need to feel that they're on-chain or be touching crypto in any way. So that to me is the most vanilla answer I can give you right now. I want DeepIn to be all over the world. These guys are doing good things in Brazil, in Mexico, in the US. So I know we've spoken about them in the past, but I hope that number gets to 30 million one day. And in the background they're using crypto rails. So that is my vanilla response. And with that, I'm going to add that Bitwise filing a prospectus for prediction shares ETFs is also cool. I just imagine a bunch of people with Bloomberg terminals thinking, how can we be more degen? And and that's what I'm hoping is happening. Maybe they got friends working on the Hill, or some political correspondents that they talk to regularly, and they're trying to trade through a Bloomberg terminal. That's what I'm hoping is my sort of semi-dystopian image that I have in my mind.
Yeah, they probably know a lot more than we do. Thomas, what's your favorite?
So I'll give a shout out to Helium because I like their projection. They're doing great. But I'm going to go with Flash Trade. So I've been a fan of Flash Trade for a while now. I interviewed a Nas a while back. And I mean, I think that this is the beginning of a lot of transitions to more ownership coins and MetaDAO, and people really looking at like, how can we align ourselves, our token, and our investors and our users. And I mean, I think right now this is one of the best models. So I like that they're doing that. I want to see how it goes. I think that Flash Trade's done a lot of things right. Like, I don't think it was that hard of a transition for them because they kind of had a really good ownership model already. So for them to transition to this, I don't think it was that big. But I think that that's the start of a lot more protocols migrating over.
Yeah, it could be the floodgates. My favorite of these honorable mentions, it's got to be Jupuary unlocking 30 billion in liquidity through native staking collateralization. There is so much SOL sitting there being natively staked that is not doing anything other than securing the network. Obviously, very important role, but if people can borrow against that, all of a sudden that's, well, to the point that that's $30 billion that can then be used, that can be redeployed in DeFi. Very, very exciting. I think a massive unlock.
Yeah.
Big fan of that as well. However, I have to say my favorite is, as always, the dishonorable mention. This put a massive smile on my face. The idea that it's somehow an unwilling redistribution of wealth, wealth that was stolen in the first place. Go for it, Finn.
Yeah, we love to see it. Notorious actor Hayden Davis returns to the meme coin trenches, losing 3 million. So sorry, Hayden, it's a bit harder when you don't have fingers and pies all over the place. Down 3 million, I don't have a lot of sympathy.
No sympathy. How can you have sympathy for that guy?
Yeah.
I openly talked about max extracting, gave us a lot to talk about for a few weeks, but I have certainly zero sympathy. In fact, it makes me happy that people that took the other side of that trade, hopefully minus the fees, are probably smiling. And I hope they know that Hayden was on the other side of that trade. And I hope they're smiling as well, wherever they are.
Yeah.
So congratulations to all of you.
Poetic justice. Just quickly, guys, I've included a link here to the big picture. You spoke with Trueflation's Stefan Rust yesterday. Very quickly, do you want to just give me a kind of what was your biggest takeaway from that discussion? If people were to watch that, what would they expect to learn more about?
Yeah, I mean, actually, you should watch it. You should absolutely go and watch it. Stefan is one of those guys who's been around since day one. He bought Bitcoin in 2012 when it was trading at $5 a pop. He's lived all over the world. He's a serial entrepreneur. He was the former CEO of Bitcoin.com. He understands the industry intimately, and he saw massive problems in the way governments were dealing with data, sharing data, and essentially misleading people without necessarily wanting to when it comes to key data like CPI, like inflation, like unemployment, all these macro indicators that we now in a maturing industry need to be aware of. Stefan has built an on-chain source of truth. It's an amazing source of truth. And even Scott Bessent in the White House was talking about it. The crypto and AI czar David Sachs was talking about it. You'll hear Anthony Pompliano referencing data from Trueflation. You'll hear Kathy Wood talking about data from Trueflation. So you should hear what Stefan has to say, how he views the world, how he views the industry, and why he thinks we're at sort of an inflection point now on our journey of maturity. And just generally listen to him to get some bullish energy as well. Makes me so happy hearing someone so animated talk about why this industry is still built on ideals. And just because banks are blocking the Clarity Act doesn't mean we should all pack up and go home. So many reasons there, but you should listen to Stefan. It's a great conversation. What do you think, TB?
Yeah, I mean, his energy alone and it was fantastic. Like I wasn't quite expecting that, and it's a good story, right? You know, it's like one guy in a small team decided that a bunch of information was terrible and that the Fed was making decisions on. So what they did is they just built a way better model, and now the government's using that data to point at it. So you know, I think it's a good story. He's a great guy, and he brought the energy. I wasn't expecting it too. So he was great.
Stefan's great. Definitely listen to the Truflation founder talking about it, and go subscribe to their newsletter as well. You can get some interesting hits there. They have some funky indexes like the deadlift index. Obviously, some serious stuff on the website as well. They've got an egg price index. Some interesting stuff. Stat of the week. This one blew my mind. I actually brought this up during our conversation with Stefan, so I think it's perfectly placed there, Finn. World Uncertainty Index reaching an historical all-time high. It's not something you hear about, right? But if you look at that chart, it's gone absolutely parabolic since the beginning of the year, since even before that. We haven't really heard about this. And then it comes out and everyone's talking about it. It seems like such an obvious indicator, way higher than COVID levels, way higher than the Iraq war levels, way higher than 2008 global financial crisis meltdown levels. And only just now in crypto land, people that are so focused on a price, are we becoming slowly aware of this? What's your take?
It's hard to know, right? Like I didn't know that this index existed until a week ago. I love that it does. I am yet to kind of dig into the actual methodologies that make up what this index reports on. But this image alone is staggering. It's truly mind-boggling to think that we are, you know, more than double, about twice as uncertain as we were during COVID, which was the most harrowing and most uncertainty-ridden period, I think, of my lived lifetime. Thomas, what's your take on this barbaric level of uncertainty?
Yeah, I mean, I don't know. I see this chart and it's like it's scary, and then I think like, all right, look at all the headlines I've been reading. Look at how people are feeling on Twitter, and it kind of makes sense to me. But you know, another side of me is seeing this, and I'm thinking, all right, that chart is topped. You know, like I don't know like how much worse it could get. I probably shouldn't ask that question, but I feel like I look at that and I'm like, all right, like what do we do in the most uncertain time? Like, I don't know, maybe that means that actually does mean that we are closer to a bottom than we thought. So I don't know, maybe I'm thinking, you know, one level ahead or something along those lines. But I mean, definitely scary times for it to be that high.
I think a lot of analysts agree with you, though. They think, you know, there has to be an inverse correlation between this level of uncertainty that we're seeing and you know, the amount of money that's flown out of risk on assets, and at the same time, the parabolic rally that we've seen in metals, gold particularly. Like, all of these things have to make sense. There has to be some mathematical reduction, and I think this chart uncertainty really sort of makes us take a step back and breathe and go, oh, well, you know what? Crypto's bleeding because of the uncertainty.
Yeah.
So I think it's good that we're now talking about this. Interesting comment that you brought on screen there, Finn, a second ago. Saying, bring it back. Yeah, saying FUD from Trump, is making markets move or dump. I couldn't agree more with this. I could not agree more with this. Never have I seen a single point of information that has such wild impact on prices in such a short period of time. We were talking for a long time about the taco trades, right? Trump always chickens out. He'd say something, markets would dump, and then he'd say the exact opposite, and markets would pump. And you know, we saw this in gold, we saw this in commodities and equities, and all sorts of asset classes have enjoyed this insane volatility as a result of Trump tweeting or putting something on Truth Social. And I think that's going to continue. So if you have some alpha and you can track his tweets and you think it's going to dump, it's probably going to pump at some point. So maybe that's a good way to trade it. But definitely a lot of FUD coming out of the White House.
Yeah, I like that you use the word enjoyed in that. You said that, you know, markets have enjoyed pumping and dumping. I think most people would say markets have suffered from this. But we'll push on. This is one of my favorite State of Solana tweets we've ever had. Mary, co-founder of Loopscale, says, once again, convinced that anyone who thinks the future is multi-chain has never talked to Solana users or developers, because 99% of the people I know stopped caring about new chains after discovering Solana. Just pack your bags and move. So this was again commenting on the Zora shift. I think this is a sentiment that a lot of people have echoed. They come to Solana, they try it out, they love the UX, and they say, why would I want to be anywhere else?
I mean, take about Mary. That's a banger of a tweet, and I couldn't agree more. She's so eloquently argued something that should be obvious to us. Maybe it's too obvious to us in the Solana ecosystem, but it's brilliant. I couldn't have argued better myself.
Yeah, I think there's a lot of one-way traffic. In last week's stream, Jack, we talked about how Solana had the record number of new developers again for the 5th year in a row, or something like that. And it again reiterated this concept that once people go to Solana, they kind of never turn back.
Yeah, that's interesting because there was was it Electric Capital report that came out, I want to say sometime in 2025, maybe late 2024, saying the number of new developers, Solana essentially taken that throne from Ethereum for as long as records had existed. And I think very briefly, Ethereum sort of reclaimed that #1 position. And I take it now the number of new developers, or at least the developer growth in the Solana ecosystem, leads all other chains, all of the ecosystem. So that's extremely bullish.
That is correct. Yeah. But that brings us to the end of the newsletter. So I'm going to stop sharing my screen there.
All right. And, that is, unfortunately, all we have time for. I have to plug Finn's newsletter here because if you want his full breakdowns and his spicy, juicy takes, then you're going to head to SolanaFloor.com. You're going to subscribe to the newsletter. It's great. You will learn a lot. I promise you. I read it every week. I learn a lot, and I work with the guy. It's totally worth your time. We also have a Thursday shows called The Big Picture. We just very briefly spoke about last episode, which happened yesterday with Truflation founder and CEO Stefan Rust. It was an amazing, exciting conversation. If you want some bullish news about on-chain data, about why people in the White House are talking about a crypto-native company when it comes to data, which could be, looks like it is, better than official government metrics, check that conversation out. Next week, we're going to be talking to Franklin Templeton's Mike Reed. Now, as you know, I'm sure, Franklin Templeton is a very heavy hitter in the TradFi world. They're a massive institution, but you'll be surprised to hear that Mike Reed, deep down, is a bit of a degen, just like us. Thomas, you and I spoke to him when we were in Abu Dhabi during Breakpoint. Personally, I was mind blown by how much time he spends on chain, how much he understands what we do as individuals, as retail traders, and at the same time is, much like people like Matt Hogan, is very much at home talking to institutional traders, partners, platforms, so on and so forth. They are, in the sort of trillions, right? The assets that they manage. So that's going to be a very interesting conversation. Yeah. I think in terms of understanding the big picture that we're facing, right? And really unpacking some of this macro noise, macro confusion, Trump FUD, if you want to call it, as that commented it earlier. It's going to be a great conversation. So join me in Thomas Bahamas next Thursday at 11 a.m. Eastern. That's Thursday next. Finn, Thomas, thank you so much for guiding us through this while I deal with technical issues. And I will hopefully fix my camera and not be joining next week through a potato. Thank you so much. And to the rest of you, GN, have a great weekend and see you next week.
Thank you all.
Yes, fellas.
See you guys.